You know, for years, Bitcoin was this rebellious kind of fringe asset, right? The stuff of cypherpunks. Well, not anymore. Now it's a huge deal on the balance sheets of major corporations. And today, we're diving into the wild story of one company, MicroStrategy. They bet their entire future on Bitcoin, and they just let slip the one thing that could make them sell every last Satoshi.
This has been the battle cry, the unwavering mantra for Michael Saylor. He's the executive chairman of MicroStrategy, and let's be honest, probably Bitcoin's most outspoken corporate cheerleader. It's a really simple, powerful idea that has shaped everything they do with the asset.
And that right there brings us to the big question, doesn't it? If the number one rule is never sell, why on earth did MicroStrategy's own CEO just publicly map out the exact scenario that would force them to do exactly that? You know, the answer to this, it reveals a massive shift, not just for this one company, but for the entire world of Bitcoin.
Okay, so to really get why this is such a huge deal, you first have to wrap your head around the sheer scale of MicroStrategy's bet. And I mean, it's almost unbelievable.
Yeah, MicroStrategy isn't just, dipping its toes in the water. They are an absolute titan. We're talking over 640,000 coins. That's more than 3% of all the Bitcoin that will ever exist. No other public company is even in the same league. Seriously, at this point, you could say the company is its Bitcoin.
And yet, despite this super hardline stance, the CEO, Phong just created the very first crack in that never sell promise. He actually called selling an admission of failure, which is pretty strong language. But then, in the very next breath, he laid out the exact conditions that could force their hand. So what is this emergency lever? What's the trigger? Well, you might be surprised. It has absolutely nothing to do with the price of Bitcoin itself. Nope. It all comes down to one single, crucial, and maybe a little obscure financial metric, the mNAV.
mNAV. Okay, this right here is the key to their whole world. So what is it? In the simplest terms, it's a ratio. It just asks one simple question. Is the company's stock worth more than the actual Bitcoin it's holding? If that mNAV number is greater than 1, it means Wall Street is paying a premium for MicroStrategy's shares, over and above the raw value of their crypto stack.
And this slide, wow, this lays out their entire playbook. It's kind of genius, but it's also their biggest vulnerability. See, they basically use their premium stock price as a money printer. As long as that MAV is above 1, they can just issue new stock, take all that cash, and go buy more Bitcoin. It's this beautiful self-reinforcing cycle that makes every single shareholder richer, at least on paper.
And boom, here it is, the trigger. The CEO was crystal clear. If two things happen at the same time, first, their stock premium completely disappears, and second, they're totally cut off from raising any more money, then selling their Bitcoin isn't just, an option. It becomes what he called a mathematical necessity just to keep the lights on.
And look, this isn't just some abstract what-if scenario. What's been happening on Wall Street recently is putting this exact model under some serious stress. It's making that doomsday trigger feel, well, uncomfortably close.
I mean, just look at this. The company's stock has just been hammered. It fell a staggering 34% in November 2025 alone. That was its 5th straight month of losses. A drop like that isn't just bad news, it's a direct assault on their mNAV, threatening the very engine of their whole strategy.
And it's not just the stock price. The big players on Wall Street, they're getting cold feet. MicroStrategy got snubbed for inclusion in the S&P 500, and now their threats, they could get dropped from other key indices. The message from Wall Street seems to be pretty clear. We don't really want a Bitcoin-heavy company in our club. And that could isolate MicroStrategy from a massive pool of institutional cash, basically turning off another tap they need to raise money.
Okay, let's pull back for a second. Let's look at the bigger picture here, because this one company's story, it really reflects a huge change in the very nature of Bitcoin, and more importantly, who's actually in control.
Now, just look at the concentration of power on this chart. It's wild. Sure, individuals still hold the majority, but a full quarter of all Bitcoin is now sitting in the hands of institutions. And when you factor in the whales, those are just wallets holding over 1,000 BTC, the concentration gets even crazier. This is a very top-heavy ecosystem. And this new reality, man, it is a world away from what Satoshi Nakamoto originally envisioned. This slide just says it all, doesn't it? What was supposed to be decentralized peer-to-peer electronic cash has basically morphed into a centralized institutional treasury asset. And its fate? It now kind of hangs on the decisions of a few guys in a boardroom. That's the exact opposite of what Bitcoin was supposed to be about.
Which brings us to the most critical and, frankly, the scariest question of all. What happens if MicroStrategy and other giants just like them are actually forced to push that big red sell button?
Well, the consequences could be an absolutely devastating domino effect, just like this slide lays out. It starts with a massive holder like MicroStrategy selling. That supply shock just craters the price. But then, that crash triggers margin calls, forcing other big companies who borrowed against their Bitcoin to sell theirs to cover their debts. Price goes down even more. Then the miners, who suddenly can't afford to operate, have to liquidate their reserves, adding even more selling pressure. And finally, you get the retail panic. Everyone rushes for the exits. It's a complete cascade of failure, but this time with a potentially global impact.
So, at the end of the day, we're left with this question. The simple fact that we now know the potential selling price for Bitcoin's biggest corporate believer, that changes everything. The fate of this supposedly decentralized network is now, without a doubt, tied to boardroom decisions and Wall Street metrics. So you have to ask, is Bitcoin still Satoshi's rebellious asset, or has it just become another toy for financial giants to play with?